Good afternoon, everybody, and welcome to DeCryptoMarkets. It is 12:57 in the afternoon on this Thursday, the 25th of October, and I hope you all are doing very well. I hope you are having a good week so far, and all of that jazz. We're going to go over the market real quick, and then we're going to go over some beginners stuff, how to draw trend lines. That may sound, and actually, even if you are familiar with how to do that, I'm going to show you another little thing that you should do along with that. Okay, so let's go ahead and move on. I don't know what you want to say. This thing is still sitting here, just flagging off of this large day we had on the 15th of October. Excuse me. We're trading in like $139 range. Really no difference there. Ethereum's the one that has actually the most like directional trend as far as between Bitcoin and Ethereum. Ethereum has the most direction move, and it's clearly a down move, but it's a very like pitiful down move. It's not really moving much at all. In fact, we've been in a I think a $7 trade range is what we've been trading in with Ethereum. So Ethereum was trading up for a little bit yesterday, then it kind of came down again. If we look at the actual dollar pair, we can see there's actually quite a bit of support that came in. This is Coinbase. There's actually quite a bit of support that came in here. Prices did fall through the triangle. We can see this happened last night, and prices fell through it. We actually traveled all the way down to $195.83 until we eventually got bought back up. And look at what we're doing. We're trading in the triangle again. Big shock. All right, so probably a little bit of a test there, testing volume, testing a price move, but all we ended up doing was seeing buyers step in to pick that up. And really, that's probably the name of the game. So nothing new going on there. Some mentions, looking at Zcash, caught a nice bid, has had a nice rise over the last couple days. Zcash seeing some moves. ZRX is peeling a little bit off, taking a little profit here. Returning to the values that it was in the middle of the month on the 16th, but looking like it may have some support. Let's see, Stellar Lumens, same story. Actually, everything's kind of got this flagging pattern going on here. Nano actually drove a little bit up. But Nano's had a flagging pattern going on ever since September 14th. So this has been going on for quite a while. And IOTA actually looks like it might catch some activity here. We're looking a little active here, which is nice. EOS, nothing. Absolutely nothing going on. See some past analysis here that did not play out. In fact, the opposite didn't even play out. It's just been flatlining. This could be indicative of, I don't know, we won't worry about that. Basic attention token, trading higher, sitting up here right on this important harmonic level right there. That should hold as a pretty strong support zone for now. But yeah, this is a pretty cool move that we've had in basic attention token. It's really ever since September 18th, where we were kind of at that low zone here around 13.5 cents. You know, we've doubled in value. We've doubled the value of basic attention token over that time. So that's a pretty good sign. Maybe not, peeling some off on profit here. We'll see. We'll get into the trend lines here, and that will kind of give us a better viewpoint of what we're doing. Okay. All right, jumping right into it. Let's get a new chart out. So I'm going to go to a brand new chart layout. Now, trend lines, you see them a lot. Probably people draw them all the time, put them on charts. I draw them a lot. Trend lines are really just lines demarcating areas of channels of support and resistance. That's all they are. they're I'll go to the daily chart here. So when we draw trend lines, if we have an upward trend, we want to draw it from the bottom. Okay, so whenever you're drawing trend lines, you're always connecting bottoms to bottoms or tops to tops. Okay, so uptrend lines we draw from the bottom, and we connect them to a series of lows there. Okay, so these are like ascending lows, and that's what we like to see. So this is a upwards trend line. To the inverse of that, when we are looking at a market that is declining, we're looking for lines to be drawn above the price action. So downwards trend lines or bearish trend lines are above price. Bullish trend lines are below price. Okay, and it makes sense because bearish trend lines signal where resistance is at, and bullish trend lines indicate where support is at. Now, don't think of trend lines as a static position, like that level or that line itself is the line in the sand. It's not. There are price ranges. I mean, think of it more like a force field. Like there's a zone above it and below it that acts as that support level. And the same over here with bearish, with the downtrend line. And the important thing to just keep in mind is that we want to look for connecting lines from tops to tops and bottoms to bottoms. All right. And you've seen people do this quite a bit. Some people have a whole crap ton of trend lines here and there. You know, this is really, if you draw your trends and you see something like this is more of a channel. And you can draw channels like parallel channels. Prices like to trade inside ranges. So, you know, this is just a channel. You can call these an uptrending channel. And they don't have to connect right to the same What did I just do? Oh well. They don't have to connect to the same like levels, like where'd I go? I'm drawing a trend line, and let's see, I'm trying to find something that might, okay. So this is obviously a down move. And it looks like there could be a channel. Why? Because it looks like there's a pretty straight support level there as well. And this is a pretty dramatic, the pitch on this is pretty steep, but you know, you just kind of guesstimate what looks appropriate for it to be in there, okay? And that's what we look for. Now, the reason that we draw trend lines is because it gives us a good idea of what may happen if price breaks a certain way. So when we say that prices are breaking a bearish trend line or a downtrend line, that means that prices are, if we're saying it's breaking above, that's exactly what we see here. We want to see prices move above this trend line, because this is the demarcation of the highs that have been met in this downtrend. And if we want to have a bullish bias, we have to wait for prices to break above it. The same with a downtrend move. If we want to go short, you know, we're looking for shorting a move where the price action is going to break below that trend line. Now, the issue with trend lines is that, you know, you depending on your time frame, sometimes you only get two tests of a trend line. And the thing is that, you know, you sometimes only get two highs or two lows before something bounces off of it, and that's it, or it never returns to that. So the problem with trend lines in the short term and in the short run is that by the time you draw them, they may be invalidated by the next time the price action gets to where it would be testing that line. So just be aware of that. But one of the things that I think will help folks, you know, is make sure that your trend lines are going, that and how you're trading them is related to the time that you are, that like the timing of the chart that you're using. So if you are using a hourly chart, make sure that your trends or that your trades are going to be done with trend lines on an hourly chart. The same if you like to position trade or swing trade on daily or weekly charts. Make sure that you are basing those entries off of trend lines on a weekly and monthly chart. And if you've seen me do on Motive Wave software, the Hearst analysis, something that I've done on TradingView, it's not Hearst analysis, but it's kind of in the same realm, is that we create a series of trend lines that for different time periods. Okay, so it's multi-time frame trend lines. I'm sure I did not develop that. I don't know if that's a thing out there or not, but so multi-time frame trend line. So I'm on a daily chart right now. I always like to start with the monthly. You go to the monthly chart, all right, and you get your trend lines drawn. Okay. Now, you want to make sure that the trend lines are relevant to the current price action. And sometimes you may want to color code them. So, you know, I'll make the monthly trends purple. Okay? And I just want to connect them to these tops here. And you know, there was one back here as well. It's a pretty steep one, but it was there nonetheless. And so those are some monthly trend lines. Then I want to break it down to the weekly. And on the weekly, I'm looking for the same kind of activity, but is it deviating much from what I have on the monthly? Not so much. Is there a change, though, on this time perspective? Sure. I see that I could probably get in some more exact trend lines by putting it on the weekly, and I'll turn those into like blue. And then I want excuse me, I want to bring it down to the daily. Now on the daily chart, you want to look, am I seeing any major tops here on a daily chart that I'm missing and that I could probably draw on here? Probably, maybe. You know, there's, maybe I'll do this one to be black. You know, maybe this swing, maybe. But probably not, because we haven't seen any response off of that, so that's probably not one we need to worry about. That angle, yeah, that one's all right. We knew that this high to this high, we see prices have stayed above that triangle. What about if we're taking it over to this high or this high? Same thing. What about that high? Maybe. I think you could safely do that. So when we're looking at the chart now, we see we have trend lines on 3 different time frames. We have the monthly time frames, which are the purple, the weekly time frames, which are the blue, and then the black is the daily. Okay, so that's giving us our major looking trend lines and at our major price structure. And then you can determine, looking at it, okay, well, how do I trade this? What am I trading up against? How do I apply this to my trading? Well, it's very easy. You look at trend lines as areas of powerful support and resistance, and you determine whether or not you're going to be very, very risky and trade before there's a breakout, which I don't recommend, or you are conservative and you're going to wait for a breakout above or below those trend lines, or you are playing it smart where you wait for the breakout to happen and then wait for a retest of that zone before you take your entry. And what I mean is, and everybody's seen this happen quite a bit, is what I mean is you'll get a breakout of a, so let's say price broke up over here. We see it trade up, but then it retraces back down to this trend line, maybe even a little lower, and then it comes back up. That's where my entry is. Okay. Yes, you can trade prior to the breakout, kind of almost front run it and put some buy stops above and ride it. But, you know, if we're looking at monthly and weekly and daily trend lines, there's a high probability that any price action that trades outside of those lines is going to retrace and be tested again. Okay, so knowing that, yes, you could probably catch a scalp trade and trade the initial breakout, but then wait for it to retest, because ultimately, if we're looking right now, if we're looking for a bullish bias moving forward, then we want to see a retest of that trend line. Okay, this monthly trend line we've already broken past. Okay, we've moved past it. We've broken above it one time here in between July and if you want to say the very beginning of August. We broke above it again at the end of August into early September, and then we finally broke above it again mid-September. We've stayed above it ever since then. We haven't returned back into this monthly trend line here. So you know, the first major downtrend line was this monthly trend line, which price ultimately moved away from, and so that extreme was ended. But then this bearish trend line here has continued, and we've stayed in it, but now we're currently outside of it in time. We haven't really responded to it above, and we're currently inside weekly and daily trends. All right, with the daily being the most recent right now. And if you wanted to, we could say that we're probably beyond the daily as well if you wanted, if we were to draw trend lines off of these two highs. But ultimately, that's what we're looking at. So, you know, if we want to be bullish, we want to see prices not only break out of these, but we would want to see them come down to retest it, hold it, and then move higher. Okay, that's what we ultimately want to see. We want to see some honesty and integrity in this move. Okay. And so that is utilizing trend lines. And so let's say you're wanting to trade this on a you know, like a 4-hour and hourly chart. You know, ultimately that's something that you're going to need to notice, and probably something you should practice, is whenever you're using oscillators like the RSI or the composite index, I hear my neighbor's chickens. Yeah, I live in South Dakota. So, composite index and the RSI, you should probably do this in general. I really don't go over this a lot, but no matter if you're trading like horizontal support or resistance or angles or channels or anything like that, you should only ever really look at those oscillators when price gets up to it. So when price got up to here, this is where you should look at your oscillators. Okay, am I trading at an extreme here? Okay, I'm overbought on the RSI, but that doesn't mean anything. But I noticed that I have a slight regular bearish divergence here between the composite index and the RSI, and certainly a regular bearish divergence with price in the composite index. So this would be telling me, you know, that on the second day of that high that got rejected, that this would probably be an area to look at shorting. So that's where you start to look at those oscillators and use them in your trading. Currently, we're close to these angles and these lines, and we really don't get, if we look at the weekly, we don't get out of the weekly one until December 7th or 8th. So could we technically drift towards that direction the remainder of October and November? Sure, absolutely. I don't know how likely that is, but we've seen prices just really tighten and constrict. And listen, even if we go down to smaller time frames, so let's go to like a 4-hour chart, and let's just do trend lines off of this price action only. So we've got, you know, this high and then this swing low to this swing low. I mean, this is a pretty thin and continues to get thinner distribution zone. And even on the smaller chart, so that's a 4 hour. Let's go to like the 30-minute chart, and we can draw trend lines up the wazoo on smaller time frames because they show up all the time. We see a upwards channel here. Eventually, you'll just notice these things all the time. But there's an upwards channel, rising channel where that fell through, and actually that created another channel. There's another channel. But you can draw as many trend lines as you want, and they're going to give you pretty much the same kind of story. And give you a lot of the same trading ideas. Now, one thing that you should try to do, I just did it, is that when you're looking at extremes like we were doing with the daily chart. So I really didn't want to draw to this October 15th high because really the high that I drew on my own charts is actually just to this swing high here. Okay, so if you're drawing trend lines and you're trying to match it up with the current price action, sometimes I really don't know how far into the future you want to put it, but don't always use the most recent price action as the endpoint for your trend lines. Try to make a habit of putting trend lines on the past price action itself to see how is price action trading up against those zones. So, here's a swing low there and then a rising trend line, and we saw price break below that. If you can see that right here, I mean, I'll draw a triangle around it. But we have where did I do that? Okay, this swing high, swing low to this swing high to oh, that's going to be funky, isn't it? Okay, that's the shaded area I'm talking about, where instead of drawing the trend line from this low to this low like we did, drawing from this previous low to this swing low, we saw what happened. Prices fell through that, found support on the weekly trend line to trade back above it, and so technically we are still above this most recent triangle right here. Okay, we haven't held or traded above it. We've spent almost 10 days above this current angle. All right. So trend lines are a very, very powerful tool, and ultimately with trend lines, you're going to end up forming what with them? If you end up drawing trend lines, you're drawing downtrend lines and uptrend lines. They're eventually going to intersect and create the most common pattern in trading, and that is a triangle. And triangles are, if you remember The Office, it's the only shape in which all other shapes can fit inside of. The only shape in which all other shapes can fit inside of. It's the triangle. That's a stupid thing to say. But triangles are everywhere in trading, and if you have strict rules, trading triangles and trend lines is a perfectly fine trading strategy and trading option for you to do. Used in conjunction with some other forms of analysis, it's fantastic. Like, we've entered we've gotten really close to the apex of a number of these. I mean, there's just, even on the short term, we're seeing a huge confluence zone right here, folks. Right, mid-November. depending on the data you're using, like Coinbase's chart, the apex is for a lot of these is like right at the beginning of November in like the tether pairs. So it's going to vary, but ultimately, I mean, as we've been saying all the way back in August or July or June, that June that a lot of these activities they come to a head here in the last quarter of the year. That's the traditional bullish time of year for cryptos anyways. And when you have long-term and short-term zones all kind of falling in on each other, that's really just telling you that the current move is there's going to be a new major trend starting in the markets. And triangles, you typically never see price action trade the entire way through it. Okay, you rarely see price enter all the way to the apex of your triangle, and it's very uncommon. There is generally the breakout happens generally in the last third, like right at the beginning of the last third of a triangle is where you often see the breakouts happen. And what is indicative of those breakouts? Imminent breakouts of triangles have the three defining characteristics, and I think it's actually three criteria for an imminent breakout is that the volume has to drop, the price action has to stall, and what was the other one? Dang it, I forget. Maybe it's just those two. I can't remember, but I know the first two is for sure. That two of the criteria that are going to tell you that you're going to be that you have to be within that last third, of the triangle. And so if you're trading within the last third of a triangle, and you know that the volume has dropped off, and that the price action has not really done much, it's just sat still, that is the calm before the storm. Okay, I don't know if anybody lives where you get tornadoes, but if you ever had like tornado warnings or sirens go off around your town, you'll notice that sometimes it's just really still and quiet out, and then all of a sudden the rain and the hail shows up, and then you start to see funnel clouds. But this is right now, like what Bitcoin has been doing is literally sitting in calm stillness, and we're waiting for the hail to start. That is exactly what we have going on here. And there's a huge just kerfluffle zone here of activity. And it's also one of the indications of the end of a consolidating move after a bear market. Well, actually, one of the fundamental identifying criteria that a bear market is over is when news continues to be negative, sentiment continues to be negative, and the outlook by traders and investors continues to be negative, but prices don't make any new lows. We haven't made new lows since February. I know that sounds crazy. Okay, yeah, we did technically move a little lower, but the same real basic structure, the floor of this market, has not moved in March, April, May, June, July, August, September, October, 8 months, moving into 9 months. That's a long time. This is the tightest consolidation range since late July or August of 2016. Like this action right here, and I tell you what, I do a lot of writing. And I trade all the time. I get messages on Upwork. I get emails. I get hit up on LinkedIn and Facebook about cryptocurrency stuff. That stuff has really dried out. And I'm not the only one. There's a couple trading friends of mine where we really joke about like how things have dropped off as prices have gone down. I mean, that's totally normal. That's very normal. to see that happen. And I like that because that's just giving proof and evidence for the bottom, for the beginning of a new expansion phase to begin. I mean, because people have either left this market already because they got burned too much, or they are just not participating in it anymore. That doesn't mean they have sold or anything. But that means they're not buying. They're not participating. They're just waiting. They're just hanging out. And so, that is the exact situation that we're sitting in. And if we look at this price action on the daily chart, and we see this little pattern here, what is this off of this move? This is a bullish pennant. Okay? Bullish pennants. And because this has lasted for almost 10 straight trading days, it's a pretty strong pennant. And we should see the breakout happen up over here. And the Bollinger Bands on the... I mean, this is like all the time frames are aligning for the exact same things to show up on your chart, where every single... You might falsely think that looking at the weekly, the daily, the 4-hour, and the 1-hour chart that you would want to see all of your oscillators in an oversold condition. You don't want to see that prior to a new expansion phase. You want to see the daily chart and the weekly chart. Well, probably not the weekly chart, but the daily, the 4 hours, and the daily 12 and 4-hour charts. They should have pretty neutral looking oscillator levels. Not really in the stochastic indicator. By the way, nobody knows who created that indicator, and it has nothing to do with stochastics. It's one of the mysteries in technical analysis. I've read a lot of stuff about the stochastics indicator, and it's kind of funny. Nobody knows where it came from. All right, so do we have pretty flat levels here? Okay, looking at the 4-hour chart, yeah, it's a pretty flat trading area. Looking at the daily chart even. The daily chart, the RSI, it has been, with the exception of the dip down on the 11th, we have been trading around the 50, the mid-level, for over a month. Almost a month and a half. Okay. Same with the composite index. It has been sitting around the 50 level. Okay. So this is a totally flat neutral market. I mean, by any measure, it is very flat neutral. Any significant spike gets sold off or profit taken, and any significant dip gets bought up, until finally we're getting into this situation that has gone on longer than I anticipated, where we are just waiting for the collective... Well, actually, it actually makes total sense if you think about it. As more and more people get frustrated, and the people who were like on Bitcoin cocaine in November and December, and even a little bit in January, they've left already. They were probably gone by March or April. All right, they probably don't want to come back into this market yet. And then the people who had a little bit more of a stomach and are like, I'm going to invest in this, I'm just going to buy the dips, they're probably sick of waiting too. All right, so they're not participating. So people who have been trying to short this market over the last month and a half to 2 months, they've been frustrated because it's not going anywhere. People who have been trying to long it have been frustrated, so they just end up kind of leaving. Okay, so what has happened since the all-time highs? Participation, the number of people buying and selling has dropped. Okay, if you trade futures or forex, if a large percentage of a small group of people who are participating in a market go one direction, what happens to that market? It moves pretty fast. When you don't have a lot of liquidity, it doesn't take a lot for people to move a market. All right? That's why you often see a lot of these, a lot of times you'll see in altcoins or even in Bitcoin and Ethereum, you'll see moves during illiquid times. And it can be during prime time during the day. It's just, lunch hour on a Friday. You can see big moves in Bitcoin and Ethereum and the broader crypto market without a lot of participation. And that's exactly what's going to happen, is that those people are going to initiate the move, and then other people who are more advanced traders than them, they're going to want to get in on it too. So they're going to participate. Then eventually, when Bitcoin has gone above 15,000, then all the other cool kids in college are going to spend their refund money buying Bitcoin. People are going to max out their credit cards or sell their homes, and bless their hearts, because they're going to be the ones who pile in money at the top so we can sell at the top. And that is exactly the process of this happening. So Trendlines tell us the story of how that entire process is working out. Okay, we're seeing a visual representation of the decline of participation. Really not interested in the whole price part of this, because there's no participation and the price level's been pretty flat. So when we start to see a lot, like a pretty nice steady growth of the average daily volume, that'll be pretty telling. But for right now, the daily volume has been pretty meh. Has not moved a lot at all. And we are, again, I said it the other day, this is a hurry up and wait scenario. But on the short term, looking at this on the 4-hour chart, Bollinger Bands, are totally appropriate for this kind of a market. So are, and so is the stochastic RSI and the composite index, although they're not very helpful for this kind of a market. But the key indication we're going to want to watch, and you'll probably want to look at a number of exchanges for this, probably the more liquid ones like Binance, Bitfinex, OKX, and certainly Coinbase is, Coinbase has a lot of volume. I just don't think it's ever really represented very well, but which sounds contradictory. But look at the volume on any move above or below this current consolidation. All right, if there is not a big spike of volume, then it's pretty much a false move. Okay, these moves over here, that's kind of what we're looking at. But even these aren't really big. These are pretty sizable volume bars compared to the last few months. But otherwise, they're not actually that massive, because the thing is that this would have been significant volume if there was follow through, but there wasn't. Okay, it was just a stop run. That's all this was. I don't know how else to explain that there's an imminent breakout or breakdown here. There's really no other way to say it. It's just we just gotta hang out, wait for it to happen, and eventually there'll just come a point here where people like me, people like you, and other traders, we're going to see price drift towards this band, the top line here, or we'll see some spike below that'll get bought up really quick. But eventually, people start pouring in the orders to get in before the breakout, and that should be a very interesting time and a very interesting event. Let's see. What's Cardano doing right now? I think Cardano might have a little bit of a breakout here soon, but yeah, otherwise, that's pretty much all I really had to let's see, Ethereum, what are you doing? Oh yeah, Ethereum's got this squeeze. Let's see what Ethereum does. It's spent the last 3 days below the 20 moving average here, and it looks like it's going to have a breakout of some sort. If we drew some trend lines, so short-term trend lines here, actually, let's look at the daily. Now, of note, when Bitcoin and Ethereum finally experience a breakout, do not be surprised if you see the altcoin markets suffer an initial like 10 to 20% loss. That is totally normal. That is nothing to panic about. Swing high to this swing high, swing low to... Okay, really nothing there. But there's our probable. Eek. Shit, that's right on it, isn't it? Damn. It's actually above it. Did I draw these right? Yeah, I did. This looks like there's a probable breakout happening around here on the 1 hour chart. False breakdown lower on the Bollinger Bands. Wicks, when you see wicks, so if things have like support, whether it's a trend line or horizontal support and resistance, when you see wicks piercing them and they don't actively move away from that level, that's called testing, and that should be a heads up to tell you, by the way, this is where people want to go. This is where the price action is going. Some people might say, well, but it looks like it's being sold off there. That's true, but the more important element here is that while the price has been rejected from crossing this trend line, bears or sellers or whoever, they've been unable to capitalize on that resistance. Okay, they've been unable to move and keep people away from it. So this is just psychology trading right here. Is just thinking, all right, I have a hard time being bearish if every time I try and short this, it keeps getting bought back up. Who's going to get more exhausted there? Who's going to have more of a is fear or greed going to weigh out more here? That's the question. Are bulls going to be more greedy or afraid when they see this happening? Definitely more greedy. Are bears going to be more greedy or afraid? They're going to definitely be more afraid. So greed rules over fear at this point. So sitting here, these conditions, we've got what is it showing? Got higher low, but what am I saying? Oh yeah, and actually the RSI is showing that too. Very little, but there's hidden bullish divergence right here, showing higher low in the RSI and a lower damn it, hidden bearish divergence. Well, we'll see if that's actually something that holds up. Hidden bearish divergence is where you have a lower high. Damn it. Ugh. I need that cheat sheet in front of me again. It's like I know what it is, but when I explain it, I get them turned around backwards. I don't know why that is. It's just very aggravating. Okay, so the RSI was just showing that we were having higher highs, and then the composite index was showing us lower highs. That's showing us regular bullish divergence. However, if we look at price, actually, no, there's not there. I thought I saw something there. Just watch this zone. and we'll see what we will see. Anyways, that's pretty much all I've got for today. Seriously, I'm going to say this every day. We could really wake up one of these days and see $1,000 candlestick in Bitcoin, a $300 or a $200 candlestick on Ethereum, and just see that hold and watch prices move pretty dramatically. Because I tell you what, you get even a tenth of the volume that we've had in November and December coming into the market right around now, it's very easily going to get to 10K. It's not going to be much of a struggle. And I would expect that 10K level to hold pretty strongly. Okay. All right. Anyways, that is pretty much it for me. Forex Lens, folks, I'll see you tomorrow morning. The rest of you, I'll see you tomorrow afternoon. Have a great rest of your trading. Watch these markets closely, and I will see you tomorrow. Bye-bye.